due to increased regulation, the commercial banks are finding it more and more difficult to lend long term into infrastructure projects. Infrastructure projects are by their very nature long-term projects, so they do require longer-term funding. So I think that there's now a much greater reliance on the IFIs and the DFIs to support the longer-term nature of the infrastructure funding, because they're not governed by the same regulations as the commercial banks. And this is called credit enhancement. And where the DFIs and the IFIs can add value is in two areas in particular. One is referred to as first loss, or a subordinated part of the loan, which is subordinated to the commercial banks. And the second is the ability to fund for a longer period of time. So typically how that would work is, say for instance, the project required 12-year money. The commercial banks weren't prepared to extend their funding beyond, say, 5 or 7 years. The DFI would fund the latter stages of the project. In other words, they would fund it from years 8 to 12 or from years 6 to 12. And that would enable the commercial banks to come into the transaction and would enable the project financing to take place. That's the first instance. The second instance, which is maybe more relevant to the debt capital markets, is if the DFI or the IFI took what they called a subordinated portion of the loan. In other words, they subordinated their claim to that of the senior banks. There needs to be a pricing differential, but certainly the DFIs and the IFIs are looking at that to support the commercial banks. I think a lot has to go to funding and the way that the banks fund themselves. So for instance, local banks, when I mean local banks, these are regional banks in Africa. They obviously have a lot of local currency through their deposit base, but they'll find it more difficult to source dollar or euro funding. So if there's a project that requires both local and dollar or euro funding, the local banks can play a very meaningful role. What has happened though is that the regional banks are now able to source dollars or euros, so they're participating in those funding tranches as well. But the biggest benefit they can bring to a transaction is the ability to fund local currency charge. As far as international banks are concerned, unless they actually have a presence in the country, in other words, they're able to attract deposits, they will find it extremely difficult, if near impossible, to fund in local currency, because they have to do it through the swap market. Because project financing is long-term in nature, they would not unlikely to find a swap counterparty. As far as South Africa is concerned, the same position prevails. South Africa is slightly different, or the South African banks are slightly different to these local banks, say for instance in Nigeria and Kenya, in the sense that they could probably access dollars and euros easier than those banks can because of the rating. As far as the RAND funding is concerned, they have almost a near monopoly because it's extremely difficult for an international bank to raise RAND other than through the swap market. And once again, because infrastructure requires long-term funding, it is very difficult for them to raise rands through the swap market. I think it has become and is regarded as the preeminent event on the African continent in terms of the debt, in terms of the loan market and the debt capital markets. I think its biggest attraction, the strength of the conference, is it brings together people from all over Africa, from Europe, from America, and it allows people to network, which is very difficult to do unless you spend several weeks of the year traveling on an aeroplane and seeing these people either in their local location, or they come out to South Africa. So I think while the talks and the seminars and the panels are very important, I think it's more the interaction between the people that has made this conference a success. There have been a number of interesting presentations. I think, to be honest, all of them are relevant to us because we are involved in both bonds and loans. I mean, obviously, some are more relevant than others. So, for instance, the Deputy Minister's speech this morning was of importance. I certainly enjoyed the discussion on the future of loan syndications in Africa. So I think there's been a number of good panels or talks. But as I said, once again, I stress that, you know, the talks are important and they're informative, but I think it's more the interaction with people who attend the conference that makes this a success.